Hello and welcome to this Trades and Tutorials video. This is Jeff Fish, president of MarketGauge.com. And in this video, I'm going to take a look at a couple of countries that you're probably not paying attention to, and an industry group that you're probably not paying attention to. But if the market's going to sell off a little bit here or consolidate, it might be time to start looking at some stuff that is not so extended. Now, I'm not suggesting that the market is going to have a major correction, just that a lot of stuff has run up and it's getting harder and harder to find stuff that's consolidating and just breaking out. And so that's what I'm going to do. But before I get into that, let's first make sure that if you're just finding us on YouTube, please subscribe to our channel. And please also know that you can get more videos like this at marketgauge.com/tutorials, as well as more information and trade ideas from our Twitter feeds, which are at Market Gauge and at Market Minute. So in the subject of this video, or the source of this video, really started yesterday or the day before. And unfortunately, the first industry group that I'm going to show you has moved higher. But on a pullback, I think it's still going to be worth keeping an eye on. So first, what I'm looking at here is our ETF Sector Active Trader scan. And what this does is it basically gives us a quick read on most of the major sectors that you'd want to trade in terms of their phase, their TSI, where it is relative to the 10-day moving average, a really short RSI, and it also gives a buy-sell signal based on market phases. So I was using this the other day to check out which industry groups might be interesting, and C showed up. So C showed up, I think, because it was changing its phase to recovery phase. Now, granted, this thing does not change. This thing does not trade very actively. It's a very thin trader, but from a position point of view, it's a pretty interesting. It's at a very interesting point right now. And as it turns out today, XHB is showing up as a phase change, so I wasn't expecting that. We'll take a quick look at that. And then doing the same thing with countries, I found a couple of countries that are in a really interesting spot. So first, let's take a look at these first two. So C, the reason that C is interesting is you can see that the blue line here is the 50-day moving average. The green line is the 200-day. If I give you a little bit more perspective, this thing has gotten absolutely crushed. And the question is this really a base? Well, what got my attention initially was this major swing level that it's coming back over. Additionally, with respect to our real motion indicator here, the way you read real motion, or at least one of the ways you read real motion, is you look for the blue line, which is let's just call it a 50-day measure of momentum, and the green line is a 200-day measure of momentum, and the dots are a one-day measure of momentum. Now, this can often lead price action, and that's what we see happening here. You crossed where the 50 in price is nowhere near. This is exactly the type of setup we look for. And then the next thing that happened was when the price pulled back under the 50 here, the real motion did not pull under the 50. Once again, confirming that the momentum was actually stronger than the price might lead you to believe. Now, that's not a reason to necessarily go buying it under the 50, but when it breaks out of this consolidation right at the 50, it is a good reason to look to buy. So unfortunately, I just missed it yesterday. I was thinking I might get a pullback today, and it kind of gapped up and moved higher. So this doesn't mean that we've missed the entire move. I'm not going to chase it, but I am going to keep my eye on a pullback. Like I said in the beginning of this video, the markets have had somewhat of a run up here recently, and if the U.S. market pulls back, this is likely to pull back with it. So if it can pull back into the 1210 range, that would look like an interesting place to start looking, with a stop under this 1182 level. All right, so the big picture here is that the momentum is shifting. This is shipping, and I would say that the prevailing opinion out there is that the economy is weakening, not strengthening, and this is not agreeing with that if it's moving up. And so that's often the right time to get into these shifts when the market seems to be running ahead of what's going on. Kind of like what I said about FXI a couple weeks ago before it exploded higher. So I wouldn't chase it up here, especially since you've got resistance right at this 1240 level. But if the momentum is and the real motion indicator is any guide, that high that we're looking at should be taken out, and we should be challenging the 200-day. However, don't want to pay up for it, so look for a pullback. I'm looking for a pullback in and around the 12 level, and then I've got a really tight stop. So while we're here, while we found the other phase change today, XHB, and actually that was as of yesterday, and the reason we would get that phase change is because the 50 is crossing the 200, and there's a couple ways we get phase changes. Could be the price going through the moving average, could be the moving averages crossing. And just like I said with C, you don't want to trade just because of an indicator. You want the price action. So today's price action with XHB breaking out over this high looks to me like, as much as I wouldn't have thought so, it might be time to start looking for entries on XHB. A natural one to start looking would be over 35. Big stop all the way down at under 33.65. So I wouldn't do that. It shouldn't really come back into the under 34.40 if it breaks out over 35. The other thing we might keep an eye on is this is one, again, if the market pulls back and XHB holds up in this area here, you've now got a pretty good stop under this consolidation. And once again, real motion has already turned higher. So real motion is running ahead. Again, that's telling us that the momentum here could be, or not could be, is stronger than the actual price action. So with the same idea, I took a look at our ETF country active trader and found a couple of interesting charts. So in just taking a quick look at the different areas of the world, so here's Europe, and the highlighted column here is RSI, so it's kind of looking for something that didn't have a super high RSI. And honestly, I've been watching Greece for a while, so I wasn't surprised to see it show up. But are you watching Greece? It may be time to start watching Greece. Let's take a look at Greece. And the other one that kind of fits this criteria is Australia. Now, if commodities are really turning, and certainly if you look at DBA, they look like they're turning, that seems like it would be a good reason for Australia also to have somewhat of a tailwind. So Australia not completely overbought yet, and as you'll see, at a very interesting spot. So first, let's take a look at Greece. Remember Greece? And if you have forgotten Greece, Greece has had a rough couple of years. But look what's happened for the first time since July of 2014, not 15, 14. So that's when it crossed under the 200-day for the last time. So the 200-day is the green line here. Couldn't get back up above that 200-day in October of 2015, but now, and I'll zoom in for you, you can see it's maintained the 200. In fact, broke out, retraced down back to it, and now the reason I think it looks interesting is it's popping again. And once again, when we take a look at the real motion indicator, real motion is running ahead, and again, we want to make sure that we're trading the price, not the indicator. Waiting for the price to move is what we'd want to do, and I would say it's already started to move. All right, so we had a nice pop in here today, and that would put us in a situation where maybe a pullback, just so you don't buy it up into the highs, into the support around the 880 level, with a stop under the 10-day moving average here under 855. Now that's a tight way to play it, and if it winds up getting stopped out, or you're patient, or tomorrow it just moves down and doesn't give any kind of a reversal, big picture here is that it really shouldn't break down below this 830 level, back under the 200-day. You've got this level of support in here from this high, and then you've got this low as a consolidation, not to mention the 200-day. All right, so if you're nimble, you could buy somewhere within tomorrow's range with a tight stop. If you're patient and you get another chance, which we could, and it pulls back into the 10-day moving average on the 860 level, you can start using your stop around 830. Now, if you take a look at the big picture here, a breakout, should it do it over $9, looks like the next major resistance here is up near 11. So a run from 9 to 11 would be a really nice move, and as you can see, it's put in a pretty substantial base at this point. And you can also see this $9 level is a pretty big inflection level right in here. So all those things add up to an interesting time to be looking at Greece. So let's take a look at AWS, and that's not, sorry, EWA, not AWS. Australia, and this kind of like Greece, it's not the same magnitude of the decline, but it's been a long time since this thing has seen its 200-day moving average, and now that it's over its 200-day moving average decisively, it's had a nice pullback and consolidation right around the 50 and moving higher, but really moving higher off of a pretty strong base, right? So if I take a look at the areas where I'd expect this thing to hold, it would be right in here and right in here. So the consolidation under this level and now breakout suggests that it should continue to move higher. And whoops, once again, you can see real motion led this higher. Real motion's confirming it to the upside. It's not a blatant real motion divergence per se, but again, you can see the real motion held its 50 period indicator while the price did not hold its 50 period in terms of price. So that's an indication of stronger momentum than maybe price would have suggested here. So the move higher, again, not one I would run and chase, because where I'd really like to be able to put my stop would be back under this 50, and if it starts to pull back, I kind of wait and see for the first turn after the pullback, and if I get a chance to be a buyer against this 1910 level, that could work too, right? So the the tighter opportunity would be to be a buyer against this 1980 level. The wider level would be under the 1907 area. All right, so that's 4 different things, 2 sectors and 2 countries that probably being overlooked and probably warrant your attention if you want to be a little bit more diversified, play with ETFs, and have a long-term view. All right, not looking to scalp these with EWA here, Australia. You can see if we break out over this base level, it's trying to get out. Next big resistance is until 22, that's almost 10%, and then really 24, and that's 20%. That's a nice move, and could be, you know, somewhat not correlated with what the US does. Hope that helps. I'll see you in the next video.